What if you could trade options a couple of times a week and profit? Yeah, not every day, just a couple of times, but every time you win. What do you think you could do over time? Like, say, a year. You just scale up and print money. You're living the life of luxury, right? Game over. I wanted to come up with a simple set of rules so that I could trade 0 DTE SPX call credit spreads daily and just set the trade at the best time and forget it. Set it and forget it. I mean, we all have busy lives. We've got things to do. We can't just stare at our computers and watch the market all day long and wait for the perfect time to take the trade off. We need a set of rules. In today's video, we're going to cover why should we sell 0 DTE SPX call credit spreads, 0 DTE SPX call credit spread setup rules and closing rules, and how do we place a 0 DTE call credit spread on the option trading platform. Hey guys, Darren here. We've got a great video for you here today. But first, before we start, if you appreciate the effort that goes into making these videos, all I ask is that you please hit the like and subscribe button so that we can get the video out to more people. I really appreciate it, and it really helps the channel a lot, so thank you very much. Today we're covering 0 DTE SPX call credit spreads. We're going to cover a simple set of rules so that you know exactly when to place the trade and when to take it off, and you won't have to watch it all day. There'll be an automatic closing order that we're going to put on right when we place the trade. I think it's super important that we understand all the different ways that the rich are getting richer, the strategies they're using so that we can use those same strategies and tools and profit in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Why sell 0 DTE SPX call credit spread options? If you follow the channel, then you know for the most part, I have been selling 0 DTE SPX call credit spreads. There are a couple of key reasons for this, and all of them are centered around limiting risk and maximizing profits. Selling 0 DTE call credit spreads offsets the positive delta in the rest of my portfolio. So, in turn, selling those 0 DTE spreads allows trading and profiting on both sides of the market. You may ask, why are you only selling call credit spreads, Darren? Well, many of the other positions in my portfolio are long, so I don't need to make money when the market goes up. I already am. That will just increase my risk if I double down and have nothing going the other direction to profit when the market retreats down, which it always will at certain periods of time. When we are in a bullish uptrend, I just try not to have my bearish call credit spreads on. So we want to use the 0 DTE time value to our advantage and wait for the right setup. 0 DTE options move very fast, so we want to minimize losses and maximize profits, obviously. I often like to watch the market move for the first half of the day, maybe even 3/4 of the day, and really pick my spots to place the trades. The market is open for 6.5 hours, from 9:30 a.m. to 3 p.m. Eastern Standard Time. However, if there is a setup earlier in the day, I'll jump on it. Here are my 0 DTE SPX call credit spread trade setup rules. There are a few different ones, 4 to be exact, and these rules are the ones I like to follow. I'm going to go through each one. However, keep in mind that I typically want 2 or 3 of these in my favor in order to sell a call credit spread. 2 is the minimum and 3 is preferred. The double and triple top rule. Anytime we have a double or triple top, it is a positive sign for selling a call credit spread. Here's Investopedia's definition of a double top chart pattern. A double top is an extremely bearish technical reversal pattern that forms after an asset reaches a high price and 2 consecutive times with a moderate decline between the 2 highs. A triple top often even is more confirmation for a downward bearish trend to come. This is just technical analysis 101. My second rule is around support and resistance. What is the price support and resistance levels, and how should you use them? Support and resistance lines can be drawn on any stock chart. Technical analysts use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. Support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs when an uptrend is expected to pause temporarily due to a concentration of supply. When a stock price moves upward and resistance is broken, the line becomes the new support. This can be a good time to get long stock or sell put options to get long. At the same time, when a stock price moves down and support is broken, the line becomes the new resistance level. This can be a good time to short a stock, or in our case, this is what we look for when we are going to sell a 0 DTE call credit spread. The third rule centers around the expected daily move. The expected daily move for a stock varies depending upon the expiration date of the particular option chain. For the SPX options, the expected daily move is on the far right of the tastytrade platform while on the trade page. For the 0 day, it is plus or minus 12, and for the 4 day, it is plus or minus 32. When selling 0 DTE SPX call credit spreads, I believe it is beneficial if we are already near the top of the daily trading range and then trending down with the other factors in our favor. I think it's tougher for SPX to continue up much further than the top of the expected daily trading range since options and the market are so perfectly priced. My last rule, and I believe one of the most important, is the trending rule. We need to be able to recognize if we are in a bullish or bearish trend, and we want to check the short-term and longer-term trends. By short term, I'm talking about at the last 5 to 10 days and longer term going back 5 or 10 years or so. Bullish market structure centers around higher highs and higher lows. So when we trend higher, we look to see if the next down move stops higher than the previous down move. We then draw trend lines at higher lows. For a bearish market structure, we see lower lows and lower highs. So when we trend lower, we look to see if the next up move stops lower than the previous up move. We then draw trend lines at lower highs. So the key thing we need to understand is, hey, are we making higher lows, which is a bullish trend moving up, or a bearish trend moving down with lower highs? We need to trade with the trend. So we are looking for a bearish trend, and then we can sell our SPX call credit spreads. So let's take a look at a couple of charts. Here is an SPX chart going back to 2009. We know that over the longer term, the stock market generally increases about 7 to 10% on average, some years more and some less. So this is a long-term bullish trend line. Right now, this long-term chart shows that we are a little above the historical trend line at 45.56. 4,300 would probably be a more fair value and closer to the trend line. If we look at the shorter term 1 month chart, we are also in a bullish trend. However, you can see we did just break through the bullish trend line. Narrowing in even closer to the 5-day chart, we see we are still in a bullish uptrend. We broke down below the 30-day trend line to the downside, but we have not broken the 5-day bullish trend line. Once we do that, it will be a positive sign for selling a 0 DTE SPX call credit spread. So we look for the trend line to the downside in the shorter term and then back to the longer term trend line as well. Now, as far as closing, we've got some closing rules. Once we have sold a 0 DTE SPX call credit spread, we need to know exactly when to close the trade. I like to make this very easy so I don't even have to watch the market continually all day. When I initially sell a 0 DTE call credit spread, I go at the money and $5 wide. So I typically collect $250 and my max loss is $250. Sometimes it's a little more and sometimes a little less, depending upon exactly where the current price is between the two $5 wide calls. The stop loss and bracket order rules that I place right after I place the trade. Every time I place a trade, I use a bracket order for the day. If 250 is the call credit received, Then I place a bracket order at 50% profit and 25% loss. This way, I'm closing for a profit at $125 and cutting my losses at $62.50. So if I'm correct 50% of the time, then I break even. This is just the odds. I'm not going to be able to change the odds as it's just options math. If it's later in the day, say within the last hour or 2 hours of trading before the close, I may slightly change the closing profit order by increasing it to 75%, since the time decay and price movement will be much faster since it's later in the day and closer to the close. The way that I win and do better is through the other factors: being near the top of the daily expected move, trending downward, breaking through support or bouncing off resistance levels, and double or triple tops. I don't even need to be concerned with rolling losers, since this will all be settled on the same day with my closing order. Once we have 2 or 3 of these factors in our favor, we go ahead and place the trade by selling the 0 DTE call credit spread. So, how do we sell a 0 DTE SPX call credit spread on the option trading platform? We go to our trade platform. I'm using Tastytrade, which is one of the best and most intuitive for trading options. These are the guys that developed the TOS Thinkorswim option trading platform and then sold it to TD Ameritrade. TD and Schwab both use it today, and Tastytrade is even better. Use the link below and you can get cash back when you open an account. I do recommend that you open an account with at least a few $1,000s so that you can place several different trades. Punch in SPX in the upper left while on the trade page. Here's the SPX chain, which pops up when we are on the trade tab. We click on the 0 DTE to open up that chain. We then click on the bid to sell the 45.55 call and ask to buy the 45.60 call. This makes a $5 wide call credit spread, and our max profit is $250 and max loss $250. Since one option contract controls 100 shares of stock, this is really $250 that we are collecting upon order placement. I hit review and send and place the order. Now, the minute after I place this trade, I'm going to go ahead and set up the bracket closing order. 50% profit and 25% stop loss is my rule. So I'm going to click on the left on both of the options and then right click to select the bracket order. I set the close for a profit at 50%, which is $125. The stop trigger is set at $3. Although it says 28%, it is really just 25% if I get filled at that $3 25% level. However, I have a stop limit at $3.20 just in case it gaps up quickly and is not able to be filled at the $3. It will fill all the way up to $3.20. Remember, since we sold the call credit spread, we collected $250 right when the order was placed. And if we hit the stop and close at $3 debit, we pay $300. So overall, for that trade, we would then lose the $300 paid to close minus $250 collected. So we would lose $50. Now, I go ahead and hit review and send and place the bracket order to sell it and forget it. We can go to the activity tab and look at our working order. We see the stop and limit prices and the close order for the profit as well. GTC stands for good till canceled. We also see where we were filled for the $250 credit. So we either profit for $125 or lose $50. If our close is triggered early in the day and our setup comes back into play, we can rinse and repeat. If it doesn't, it doesn't. We wait and look at the next day. If we get stopped out, that's okay too. That is why we have the stop in place. We can look at the setup again fresh and decide if we want to place the trade again from a better position. Remember, if we then win after losing once, we are still at break even for the day. Of course, we just want to win in the first place and then rinse and repeat and do it again. All right, guys, if you're a beginner and this sounded kind of confusing, don't worry. It did for me as well at first. We'll continue to cover more details on option trading in future videos and learn together. I've put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Check out the links for the option trading course, Tastytrade, as well as coaching. And leave a comment. Let me know what you're trading, what you're having success with. Any questions that you have, I will be sure and answer every question. Thanks. See you in the next one.